Good morning, good afternoon, or good evening, depending where you are on the planet. And welcome to the Wednesday, the 25th of September, Bull versus Bear webinar. Steve Miley here on the Call for Trade Day. Welcome, everyone. It's going to be super fast today because there's very little to say. And I'm a big believer if there's not much to say, don't try saying it. But we'll go through our regular run through and see what we've got to offer up in here. Just quickly, let me dupe this page and then we'll go back and look at yesterday's data. The focus, remember, as we went into yesterday, was on the consumer confidence data. A significant miss on the US consumer confidence data, but not really a big negative impact onto stock indices. They were kind of choppy through the session, but ultimately nudging higher. A new record high close for the S&P 500, and markets still stay positive, up at recent highs on the Dow, S&P, not far from those. Been quite overnight. US futures, little change. European indices, we'll take a look shortly. We did get another booster package or a boost from an interest rate cut from China again after the previous sessions. Positive policy announcements that we saw. So overnight's kind of been relatively positive, but not really reflecting in the price. Yesterday's data, if you would argue, and slowing down. I think we've got a little bit in here as well, though, that was choppy around the data. And I think what we're seeing from that CB consumer confidence missing expectations, it's more reason for the Fed to be more aggressive. And we are seeing that slightly in the CME Fed Watch tool and in the interest rate markets. So we'll take a look at those shortly as well. So yeah, that missing here, in sort of counterintuitively, is reinforcing the view that the economy is slowing and that the consumer confidence, it's a good lead indicator as well, consumer confidence. And then what we're seeing there is there maybe the market reacting sort of almost counterintuitively slightly positive. Why is it reacting positive? Because we know the Fed have gone big already. If they continue to see slowdown, they may continue to go big. And then on the weight of it, even though the consumer confidence is falling, a more dovish Fed is seen as more positive by the markets. Looking into today, it's been very quiet and it continues to, the outlook remains quiet for the day. So on the overnights, we've had very little out of Europe. We've had core CPI data from Japan, bang in line with expectations. Very little out of Europe in here this morning, and you can see very little from the US going through the session in here. We've got the fireworks potentially coming tomorrow and through Friday, where we have Powell Thursday, and then we have the PCE data. I'm going to be handing over to Duncan for the Thursday and Friday, by the way. So Duncan will be looking at those, looking at Powell, pre and post Powell, and then looking at the run into the PCE data. Remember, the Fed's preferred inflation measure. So very little on the data front to be monitoring going into the day on the US side. Let's take a look at 5 things to start your day out of Bloomberg. So US stocks futures slightly lower in here. I've hanged with the S&P previously on Tuesday, posting his 41st record high close of the year, but we're only slightly lower on the overnights. More Chinese stimulus in here, to China in here. Central bank lowered the interest rate charge on its 1-year policy loans, so another little push, having had that significant package that was delivered back on Tuesday, and then gold hitting a record level in here. US dollar continues to weaken with anticipation for more US rate cuts and a more dovish Fed, and that's helping push gold higher. And these not really too significant for us. SAP, German software developer, tumbled in Frankfurt, and the OECD actually putting out a positive tone on the global economy, with expectations that with inflation falling, central banks will continue to loosen policy. So that's an upbeat note from the OECD. So just running through those headlines, there's China cuts 1-year policy rate by most ever in this ongoing stimulus drive that we saw from the previous session. And again, in a similar headline, Xi's economic adrenaline shot is only buying China a little time, and then China's new stimulus plans make a splash in global markets. Global economy moves beyond the inflation crisis to stable growth. That's from the OECD article. And then turning our attention to the Fed, you could argue, I've been saying recently that the uptick in US bond yields has been a reflection of potentially let fewer concerns over a hard landing, but it also probably represents in here concerns about potential inflationary pressures coming back through if the stimulus is too early. So say, look, Powell put may have come too early to give too early given economic resilience. So that basically the argument here is that maybe the Fed have gone too big too early in here, and then that leaves, even though it means we're going towards potentially a soft landing rather than a harder landing, it also then potentially means that it could re-stimulate inflation pressures, so see reflationary pressures come through. US futures muted on the overnight after another S&P record, as we said in here. On the overnights in here, despite that boost to the stimulus package from China, Hang Seng only managed to add in just under 7/10, with the Nikkei down around 2/10. European exchanges are mixed in here this morning, with the UK FTSE 100 up about 4/10, nearly 4/10 down though on the German DAX, and 2/10 down on the French CAC. And if we turn our attention to the US on the overnights in here, as you can see, little change on the overnight so far. So Dow pretty flat in here, S&P fairly flat, slightly lower on the Nasdaq. A quick nod to the CME FedWatch tool for the next meeting in here. We have seen a slight. This has been sitting around 50-50, so slight move towards a more aggressive tone, so nearly getting up towards. So that's 58, nearly getting up towards 60-40 now for a 50 basis point cut at the next meeting. But this is a significant move in here. If we go to the end of year and we look to the end of year now, what we'll see is now only 18% chance that we get. So here, this 425, that's a total of 50. So looking for not much chance there for only 225s at the next two meetings. So the market is really pricing in here at least 75 basis points a cut. So a 50 and a 25 and a 33% chance in here that we're another 100 basis points down in the next two meetings. So a total of 50 and 50 to come. So in here, the best chance though 50, and then maybe a tempering to 25. But now you say a fading chance now of the Fed won't go big again this year, that we don't get another 50. So that's quite interesting. So certainly we're shifting towards the market's expecting a still very dovish Fed into year end. As I say, on the bond markets in here, we continue to tick up. We did go slightly higher in yields and then backed off to lower yields yesterday, but then nudging back higher here on the overnights. So partly in here due to reflationary concerns, but also partly to do with a belief then also that we are going to avoid a hard landing in the US economy. Turning attention to the market chartist reports. So we still see on the long end a more negative tone, although we did hold on that to that trend line support on the 30-year in here, and then also on the 10-year bouncing off the trend line. But if you see in here, if anything on the short end, you're seeing short end go up in price, lower in yield. So despite still pointing down in negative pressures in here for bond prices, that's higher yields remaining on the 30s, 10s and 5s to a greater extent. On the 2s, we remain in here bullish, and the market moving back up to higher prices, which is lower yields, and that's because of that shift that we just looked at on the CME, right, on the FedWatch. That's echoing that on the 2-year, an anticipation of a still even more dovish Fed. On the equity indices, obviously a new record high yesterday on the S&P, and then overnight marking time, so still looking bullish there, still looking for upside risk. And if we look at the Nasdaq now having nudged up at this 2051 and a quarter swing high that we had from July, the market now setting itself up for a break up to and through there. Let's take a look at the actual chart. So here's the Nasdaq first of all in here. So we eclipsed last week's peak. There's the choppiness that we saw, I say, around that data yesterday. There's the choppiness down and then back up again in here with the consumer confidence around the open, and then just after the open, and the market making a new intraday high in here on the Nasdaq. And you kind of see, we're in this kind of flag pattern that I mentioned yesterday. We kind of broke out on the top side of the flag, but also tested on the downside. But then, ultimately net for me, this is still a bullish potential breakout. Similar story on the ES in here, not quite making a new intraday intraday high, but say it was a closing high for the S&P cash market, and we're sitting right up there, just below the recent highs and the high from last week. So I think all the risk is that we can go higher there. So for me, still pointing north. Still looks like we've got further upside pressures. If I go and take a look at the Nasdaq on the daily chart, you can see we've poked at this peak up here. That's that 2051 and a quarter, with the peak yesterday at 63 and a quarter in here. So the market did just nudge above it in here, but I think we get a little bit of a better push through there. We could run higher. It may not do it today because we've got no real data to spur us on. It might be a wait and see until tomorrow. So I think a positive consolidation day with potential slight extension if we break the highs again here on the Nasdaq and on the ES. I think there is risk that we do extend a little higher. It's not going to go running away, given that we've got Powell tomorrow and PCE on Friday. So upside threats, but limited, more of a range with a positive bias, I would say. I'm going to wrap it up there. As I said, passing the baton for the rest of the week to Duncan. He'll pick up the webinars on Thursday, Friday. Going to wish you all a great trading day. Take care. Stay safe.